for maybe another 10 minutes or 15 minutes to allow enough with us. Okay, so allow the latecomers to join us this session. It's going to be fantastic. Would learn enough the improvement in the of course, of course. So let's just allow for 10, 15 minutes to allow more people join. Okay. Someone's comment in to have you around Nedu, some Justina. So let's just hold on for 10 minutes or 15 minutes, like I said. Afternoon, Labo. Good afternoon. See you. Welcome. For our friends who are just we are just holding on for uh weekly. We're going to be starting shortly, but I need as many people as possible. Fond of attending events very late. Okay. We will be starting in another 10 to 15 minutes, like I said. Can you hear me? You can drop your comment in the chat. Let me know morning or afternoon or evening. Okay. You're all welcome all in the chat. Caller, I can see you. Felix, Justina again. Is Vic D. I can see you. Listen, Gideon, I can see. Welcome, welcome once again. Glad to have said earlier minutes for some of our other friends joining us on this session. So please be patient. Okay, we're going to jump into the session. It's going to be fantastic, enjoyable. All right, I just want to make some okay. I'm still here with you guys. We want to make sure that internet connection does not destroy enjoyable time this afternoon. Just switch my So can we hear me better now? Please let me know if it is much more better now. Augustine Johnson, you told me earlier the audio was breaking. Let me know in the chat if you can hear me better now. Fantastic. Thank you, Johnson. Thank you, Dezid Emeka. Okay, Augustine, thank you. Onamdi, thank you. Thank you, Harrison. Thank you. Fantastic. Akintomide, thank you. Thank you, Prosper. You're all welcome. Keep Chicha. Welcome. Thank you. Fantastic. Okay, we're still waiting for our friends, and we will start this session shortly. It's just about 44 of us on this call. We need the numbers to at least hit 50 or 60, then we can kickstart, okay? So just be patient. Just be patient. In the game of trading, patience always wins, so be patient. If you're just joining, you will not be able to hear me. All right, so welcome once again, everyone. We are just about two numbers short of 50. So if you're just joining us, we're starting in another 3 minutes. 12:25 on dot, we will kickstart. So just patiently wait. We are now 50 in number. It's a good number, but I still want to see more. We start in the next 3 minutes. Invite your friends, share the link to your friends, share it to your families. Let them join. It's about to get interesting. It's about to get interesting. And then while we're waiting for our other friends to join, I just want to say to us that next week, Wednesday, we will be having a live trading session, CPI live trading session with PS next week, Wednesday by 1 p.m. So you can mark your calendar and then get prepared to make some money. The last time was fantastic. This is going to be also interesting for everyone who participates. So we start in another 1 minute, and then there's no looking back from there. Welcome to everyone who is just joining. Good to have you around here. Awesome. So we're starting. We're starting already. Welcome, welcome, welcome once again. Like I introduced myself, or like you can see on the flyer on your screen, that is my humble self, Samuel. Some of my friends and colleagues call me RSI. Okay, so welcome to the Yellow Metal Mastery. And I'm glad you could make it. I'm so glad you're part of this. Okay, so I'm going to be starting today's session with a short story about myself. Okay, I'm going to be starting with a short story about myself. And I'm going to be taking us back to the year 2021, 2022, precisely. 2022, I remember. Okay, it was just after the COVID pandemic had struck, right? And then during the COVID pandemic, many people couldn't go to their places of work. Many people couldn't go to their businesses. Many homes or many people had to be indoor, because of the fear of contacting the virus, COVID, right? And then there was a national, not national, global shutdown. People were indoors enjoying their time. So people who were not making money online found it difficult to survive in that period. Okay, so at that time, I was already into trading the financial market even before the COVID happened. But I remember shortly after COVID, okay, I ran into or I was opportuned to come into the community of traders. It was October, November, December of 2020 precisely. I was opportune to come into the community of some traders. And in that community, I wasn't just opportuned, I was also opportuned to gain access to a tangible sum of trading capital. Now, this was not funded account. This was not prop firm funds. This was a real raw cash, $10,000 as at 2022. Okay. And in that community, these guys had a pool of funds. I mean, I didn't know how much they had because it was more within it was more private. Okay. But they gave me access to the funds of $10,000 to trade as a junior trader at that time with that organization. Okay. This was 2022, October. I came into their company. And I remember October was very good trading. Okay. November was very good trading, but something struck towards the end of November. I would never forget in my life. Okay, and that's what I'm sharing with you. This particular afternoon, I had taken a trade on that $10,000 account on gold, and I had made, I think it was $1,500 in that particular day, on that particular trading day. So I don't know what propelled me to, it was gold. I was trading gold anyways. So I don't know what propelled me that afternoon to go into another trade. I remember clearly, took two positions, sell, sell, one standard lot, one standard lot. Okay, and then in that community of traders that I belonged to at that time, one of the things they discouraged in that community was we don't trade with stop losses. We have enough capital to cover for whatever drawdowns our trades face. Right? So I took those trades that particular afternoon after I had made 1,500 in a previous trade. I mean, and then to my greatest shock, the trade started going against me. In like minutes, I saw minus 2,000, minus 3,000, minus 4,000, minus 5,000. Then I called one of the senior traders and said, I don't know what's happening. Gold will ruin this account, right? And then he said, Sam, you know what? I can see that there is a support here. When price gets to so level, we expect it to rebound. Trust me, it was not as he told me. We had to manually close those trades at the time the account got to 2,500, just a little bit above $2,500 from $10,000 plus the extra 1,500 that I had made that same day. We closed the account at $2,500 gold, as a matter of fact. And then that day, I was so depressed. In fact, not just that day. I mean, I remember for weeks, I was so depressed throughout 2022. I mean, I would literally come into that company and I would be so quiet. I felt like there was a heavy debt on my head. I can never forget. Okay. And then, from time to time, I would look at myself and say, you, this gold. Now you do me bad. You made me look like an amateur trader before these guys. You made me fail. You have cost me so much wreck. I am never going to trade gold again. And I believe that many of us on this call have found ourselves in similar cases or similar scenarios where we say, I am never trading gold again. I almost had an heart attack the last time I traded gold. This gold once sent me go early grave, right? That must be some of your testimonies too about, oh, this asset called gold. Okay. And then many times I have come to discover, I saw this funny thing on X the other day when someone said if you're trading gold, you need all of these things next to your bed or next to your trading decks. You need to check your blood pressure at all times. You need Buscopan, okay, an antidepressant so that you don't run wild. You need ORS. You need also the scriptures, right? And then I saw this and I was like, really? You know, that's how funny many traders are when it comes to trading gold. Okay, gold is one of the most profitable assets globally traded, but it's also one of the most dangerous assets if you are not a disciplined trader. Okay, if you're not a disciplined trader, you will struggle when it comes to trading gold. In fact, you would find it so difficult when it comes to acing gold as an asset. So for the sake of this particular webinar that you have joined today, we will be focusing on these key areas: risk management when it comes to trading gold. And then also I will be taking you into the charts and I'll be showing you how you can daily make profits from trading gold. I mean, the right setups to look for, how to validate these setups, what to ensure you are not leaving behind when it comes to trading gold. Because, I mean, if somebody was saying the other day to me and he said to me, Sam, trading gold is like ritual money. It's like blood money. And I was like, yes, it's like blood money. But trust me, it can also be the money, it can also be that thing that sent you back to your village. But when you trade it the right way, with the right risk management, with the right strategy, which I will be showing you today, your struggles will definitely be over when it comes to trading the gold asset. Do we understand? So if you can hear me, you can write in the chat session. I can hear you loud and clear, and I am following you. If you can hear me, let me see your comment in the chat. I can hear you clearly. I can hear you clearly. Oh, perfect. I can see the comments and the chats flowing in. 11, 12. Fantastic. Fantastic. It means we're all following. We're all following. So maybe some of you are like myself in 2020. I mean, you decided that, oh, this gold asset, I know Sabias didn't do more, so I'll just leave it and then focus on other less riskier assets. When it comes to trading, anyways, we have different, especially trading on our platform 10 Trade, we have different classes of assets. We have the currencies or the forex, we have the commodities, we have the index, which is the indices rather. Then also we have cryptocurrency. Can we still hear me, please? I think I just had an issue with my network. So like I was saying, when it comes to Forex, they are low risk assets with low rewards. When it comes to commodities like gold, silver, palladium, okay, these assets are high risk, high reward asset classes. Okay, right? When it comes to the indices market, the indices market comprises of high risk, high reward assets, same as the cryptocurrency. These are high risk, high reward asset classes. So if you're trading an asset like gold, your risk management has to be sound. Not just your risk management as well, your psychology and your strategy has to be sound. You need to know what you're looking for. And when you see what you're looking for, you hit it straight. Okay, so I'll be showing you all of this, building your confidence, and then let's see how we can move from there. Okay, now I want to break this myth that is actually stored in the heart of many traders. Now I wrote here, and then I would be reading to you. It says you need enough capital to trade effectively. Don't be deceived. Don't be fooled. You need enough capital to trade effectively. Okay, $1,000. Okay, if you have $1,000 capital trading, okay, with proper risk management and planning, is better than $50. Okay, with loads of desperation. Let me tell you why. Let me tell you why. Let me tell you why. You know, a good trading capital gives you room to manage your risks properly. Okay. Also, it helps you to survive losing days. I was speaking to someone this morning and he told me, I'm trading on gold, but I keep getting to lose my money. And I asked him, how much have you been funding into your account? He told me $10. I said, 10 what? $10 is the value of your stop loss on a trade when you're trading gold. If you are fortunate to even be using a 0.01 lot size, I mean, by the time you set your stop loss, except you don't trade with a stop loss, the stop loss will even be telling you $15 is what you will lose on your MT5. Okay. And then, I mean, if you're doing that with just $10, you are shooting yourself in the foot. So $1,000 with proper risk management and planning is better than $50 with loads of desperation. You know, trying to, what do they call the term again? Trying to flip $50 into $1,000. You will not achieve it. I mean, 1 out of 100 will achieve it. That's the truth, right? Why a good capital is important. It gives you room to manage your risks. It gives you the ability to scale your strategy over time. Also, it allows you to trade with less emotion and more discipline. Okay. But if you are trading on a small capital, you will be under unnecessary pressure. Okay. And there are certain trades you will not be able to take. Okay. There are certain risks you will not be able to make. And then you will not be feeling the confidence will not be there. You will be too scared in your trades. You want to close it immediately. You see some $2-3 profit, as if $2-3 can feed you for a month. Okay, this is one of the problems that many traders struggle with. So, like I said, and like you can read on your screens, you need enough capital to trade effectively. Remember when I was introducing the commodities, I said they are high risk, high reward. So if you're doing something high risk, high reward, it means you need a sufficient funds so that you can manage your risks properly. Unless you will keep shooting yourself on the foot. Do you understand? So that is a very, very important thing that I want us to keep at the back of our minds as we proceed in this class, as we proceed in this webinar. Do we understand? So, very interesting. Now, I want to show you something very, very, very fantastic. But before I show you something very fantastic, I want to ask a question. Something happened on gold earlier this year for the gold traders, I mean, the gold diggers on this call. Something happened on gold early this year. Who can tell me in the comment section what happened? There was something interesting that happened on gold. Who can tell me? Oh, who can tell me what happened? Creating, thank you, greatness. Creating another all-time high. Fantastic. So at the beginning of this year, I think it was around April. Very fantastic, all-time high. We first saw 3,000, then later on we saw 3,500. Correct? Now let me show you that you have just missed, okay, the 7 most important trading days of 2025. I'm going to go to my chart. I'm going to go to my chart on MT5, and then I'll show you. I hope you can see my screen. This is gold. This was gold in, this is gold on the daily time frame, okay? And this was sometime in April, okay? This was sometimes in April, April 7, April 8 to be precise, okay? Gold was trading, okay, initially gold had broken above 3,000 in March, right? Okay, this was March 31st. Gold had broken above $3,000, March 31st. And we saw this pullback, right? That created the new all-time high of 3,500. Okay, now what I want to show you are the 7 most significant trading day of 2025 that many traders who were too scared to take steps or take action, or who didn't know at all, because information is power when it comes to life and when it comes to trading itself. Okay, gold rose from around 3,000 to an all-time high of 3,005 in just 7 days. Look at the candles here. Candle 1, the 9th of April, candle 2, the 10th of April, candle 3, the 11th of April, candle 4, okay, the 14th, candle 5, the 15th, candle 6, the 16th, candle 7, okay, and then it rose up to 3,500 in that range. It was just about seven days thereabout. Okay, 7 days of strong bullish candles, right? Now, let me show you something very quickly. Now, I had done something here. If you can see my screen clearly, you'll see a buy limit, right? What happened? After it broke above 3,000, there was a retest, right? And after this retest, okay, of this 3,000 psychological level, price formed what we call a morning star candlestick pattern on the daily time frame, okay? And then after this pattern formed is a pattern that indicates a continuation of the previous trend, especially now that we're in an uptrend. So it's a pattern that tells us, oh, this market is about to get very, very bullish. Now, look at what happened after then. Boom, 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 boom. Now, if you had seen this, okay, because even at the beginning of this year, I remember on a particular day I posted on my WhatsApp status, and I said to some of the people who have privilege rather, to see my status, I said, gold is set for new all-time highs. At that time, I even said, okay, because I would you try really follow the guys like JP Morgan, okay, what they have to say at the beginning of the year, the Chase Bank, I will follow them. Okay, the big banks in America, what are they saying about gold? What are they saying about Bitcoin? What are they saying about the stocks and the index? You know, I just find love attractions to those things. So I read in one article that it was JP Morgan who said that, okay, gold might be heading for 4,000 per ounce this year, 2025. And then at that time, it was trading just below 3,000 per ounce. Okay, until this happened. So if you had privacy to this information, this could have been you with just a standard lot, okay, with just a standard lot on gold when it was just a little bit above 3,000. And after this morning star pattern has formed, you could have been walking home, okay, with nothing less than, what's it here? Okay, this is disrupting me. Fantastic. You could have been walking home with nothing less than $41,700 if you had taken advantage of this move upwards. I mean, this is a bullish move. This is a move that was spoken of literally every time. And then to make it sweet is the fact that doing this move, there was a trade war. Okay, not just the trade war, there was also a war between Israel and what's it called? And what are they called? Is it Hamas? Yeah, there was this disagreement. Israel was bombing Hamas. There was call for ceasefire left and right. And then in times of uncertainty like that, gold, of course, was expected to rise this high. Interesting. So if you had missed out of the most important 7 trading days of this year, my call to you is do not miss out on the next big move on gold. Do not miss out on the next big move on gold. Okay, so let's quickly go into our chart. Now, what are the fundamental drivers for gold? We're going to talk about that very shortly. I'm going to have a session about this also on another webinar because I don't want to dwell too much on this for the sake of this class. This is more about strategy. This is more about how to read the charts and how to make money from trading. Okay, so what are the major drivers for the asset called gold? Number one, supply and demand. Okay, because it's a commodity, and then there are certain nations, okay, that mine gold, right? So if those nations, for whatever reasons, are affected, right, there is a possibility that it might disrupt the supply of gold globally. Okay, and then there's also the demand. Okay, central banks since the start of COVID have been loading up their gold reserves. Okay, and then the more that they do that demand, okay, the likes of China, the likes of America, the likes of UK, the likes of Australia, they are loading up, Japan, they are loading up their gold reserves. Why? Because gold is an edge against inflation. Gold is an edge against economic uncertainty. People preserve their wealth in times of geopolitical tensions, like it happened during the Russia-Ukraine war. Okay, people put their money into assets that can preserve their wealth, and gold is one of the major ones that people tend to turn to, okay, when there are geopolitical tensions. Also, interest rate and monetary policies, they have a way of affecting the price of gold. For instance, we recall that there is a season of rate cuts that has been going on, okay, since last year, right? But when rate cut was not when rate cut was prominent, okay, people were taking their money and then they were putting it in the dollar as a safe haven asset. Okay, people were taking their money and putting it in what's it called, in the dollar as a safe haven asset. Okay, why were we doing that? Because at that time interest rates were high. Okay, and then they knew that if interest rates were high, the currency dollar will be performing at its best. Now we are in a season of interest rate cuts, okay, and then people are turning back to gold, okay, because now they are not earning enough rate or interest on their dollar or on their Swiss franc or on their safe haven currency assets. Do we understand what I'm saying? So gold is actually driven by these major fundamentals. When there's a geopolitical tension, you should be buying gold. You wake up in the morning. Many of us don't even read the news, and then we call ourselves traders. You wake up in the morning and then you discover that, oh, there's something wrong between China and US. Trust me, gold is going to be reacting, right? It's going to be reacting, right? You wake up the next morning, you see that there's an earthquake, maybe somewhere in maybe Pakistan or something, or somewhere. Okay, maybe one of these countries where gold is largely produced, South Africa, maybe Ghana. Okay, and then you're like, oh, something will definitely happen to the price of gold today, right? So these are the things you can look out for when it comes to trading the asset called gold. Now, very quickly, without much further ado, I'm going to go into the trading strategy that you can use to remain profitable trading the asset called gold. If you're following this class, I want you to let me know in the comment section. I can see so many of us are really dropping some comments. So let me know if you can hear me clearly, loud and clear. I can hear you. I'm enjoying the session. Oh, it's a great one. Let me hear you. Let me hear you. Let me hear you. Matthew, I can see you. Fantastic. So, so far, we have been able to cover the fundamental drivers for gold. Okay. And then I've showed us that we have missed one of the best trading opportunities of this year. More are still to come. Okay. And then I have debunked that you will keep shooting yourself in the foot if you depend constantly on that $50 or $20 capital, and then you want to buy a let's not even say Ferrari. It's a slap on the face of Ferrari for someone who is trading $50 to say he wants to buy it. Okay, let's say you want to buy a Toyota Corolla, right? So that's a big slap, right? Now, we have also talked about what we'll be focusing on for today. And then I have shared with you my story, how I started as a trader sometimes in 2020, and then what has brought me here, right? So let's go into the simple trading strategy that I want to share with us. Now, I'm going to just read through this concept, right? Then we will go to our charts to identify it. Very simple. This is something you can trade during any market session. During any market session. You can trade it Asian, London, the New York, okay? You can trade it on any session. Now, the first concept is market structure. So if you are not if you are a new trader here, I'm sorry to say you might struggle a little bit with some of the things I would say here. Okay. But if you need further guidance, okay, you can reach out to your account manager. They will properly point you in the right direction of what you need to do to get access to premium education like this. Okay. So the first concept we will be considering is market structure. And market structure helps us to identify the directional bias, okay, on gold. So the first thing is market structure. And then usually for this strategy, we will be focusing on the 1 hour time frame. The second most important thing to look out for is identify the premium and discount zones using your Fibonacci tool. I'm going to show you all of this on our chart shortly. Then the third thing you want to do is identify the order block or the fair value gap within premium and discount zones. Now, I know many of us are probably new to the term order block or FVGs, right? So I will just do a little talk about it when I go on the chart. And then if you need more enlightenment on it, you can always speak with your account manager who will show you what you need to do. Okay, then after you have identified the OB and FVG on the premium and discount zone, okay, then you jump to a lower time frame of either 3 minutes or 5 minutes to look out for lower time frame BOS, which I call break of structure at H1, FVG or OB, right? Then your entries will be a retest of the 3 minutes or 5 minutes fair value gap or order block. Fantastic. Are we together? So let's quickly go into our chart and establish a few important things. First thing, market structure. Right? Now, can we see my chart? If you can see my chart, let me know you can see my chart. Fantastic. 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 Okay. Yeah, this is the point where you should take your pen. I see somebody saying, make a pen and book. Let me take my pen and book. Oh, very good. This is the point where you should take notes. This is that point where you should take notes if you're serious about making money. Okay. But if you're not serious, I mean, you can carry on. This is the half of the year already. Okay. I forgot to ask at the beginning of this call, how many of you have achieved your goals, your trading goals for the first half of the year? You know, at the beginning of the year, I'm sure somebody on this call was saying, I'm going to be up about $10,000, about $20,000 on my account. I'm going to have done this and that and that and this. But this is the second half, another opportunity. What are you doing? What are you doing to make it better? So take notes. I mean, you can't keep everything in your head. You need notes. So I'm going to go back to my slide so that you can see it again. These are the key concepts. You can write them down or you can take a screenshot with your phone. That would help you to properly digest it much more later. Fantastic. All right. Okay. What's this? Okay. So I was on my chat. So now this is who is writing on my screen. Chisom, please, oh, be guided. Um, okay. Thank you. Thank you. Thank you for taking it off. All right. So this is market structure 101. We know from trading that there are, what's it called? There are three major trends in the market. We have what we call the bullish, where market keeps creating higher highs, higher lows, correct? And we have what we call the bearish market, where market keeps creating lower lows, lower highs, right? And we have what we call a ranging market, where market is not moving anywhere. It's just going up and down in between that range, right? All right. So, but for the sake of this class, I'm going to focus on these two only. I'm going to focus on the bullish and the bearish market trends. Now, how do you know a market is in a bullish trend? Simple as ABC. When you see it creating new highs, new what? New highs. You know it is in a what? It is in a bullish trend. These are new highs, right? When you see a market creating new lows, then you know it is in what? A bearish trend. Correct? Fantastic. So if that's what we have been able to establish about market structure and directional bias, that is the first thing you need to know. If you don't know this, go back to your charts. Go and look at Euro USD. Go and look at GBP USD. Go and look at all those pairs. Study, even on gold. Study and say, what's the structure now? What's the structure now? What's the structure now? Ask yourself those questions, okay? And then you will get the right answers. Okay. All right. So this is where we are. Now, this is a bullish scenario that I'm trying to paint to us. Now, I said during the presentation that the first thing you want to look out for is the market structure. Correct? Now, our market structure says that we are bullish here. Why? Because this is a high. This is a new high. What's this two? Okay. This is a high. This is another high. This is another new high. Correct? And then this is a higher low, another higher low. Now, I mentioned something earlier about order blocks and fair value gaps. It's a concept I want you to study, and it's a concept I want you to master. It will help you with using this strategy. Now, when it comes to fair order blocks, first of all, order blocks are more. They are two of their kind of its kind. There's what we call the bullish order block in a bullish market, like we have on our screen, and there's what we call a bearish order block, which I will draw much more later on this screen. Okay, for the bullish order block, they are usually represented as a bullish engulfing pattern formed at the base that created a new high. So I'll say it again. It's a bullish engulfing pattern, okay, that formed at the base of a new high. So this is a new high that was created. This is the base of this new high. So at this point, there has to be what we call a bullish engulfing pattern. So you all know what your candlestick pattern is. I can't begin to explain that on this call because of the brevity of time. But if you want a master class like this, fantastic. You can reach out to your account manager. They will connect you on what you need to do. Okay, so but I can't go into what bullish and bearish engulfing patterns are, but a bullish engulfing pattern forming at the base of the high that was created here is there's an order block there that has formed. Okay, so that order block was what sponsored the break of this high to create this new high. At this base here too, there's also something that is called an order block that must have formed that broke this last high to create this new high. Are we together? So in between, usually, okay, because it's an explosive move to the upside to break this high, right? There is what we call inefficiency that was created in the market, okay, which is what we call the FVG. Now, at this point of inefficiency, big institutional traders have set buy limits, okay, at this point. Okay, now institutional traders have set what? Buy limits at this point for the market to come back, fill in that inefficiency, then continue upwards. Like I said earlier, this is a concept and this is where you need to pay more attention, right? So I said for a structure to break, it is usually sponsored by an order block, okay? And after an order block has broken structure, in most cases, there's always inefficiency. Sometimes there's always inefficiency that is created that the market has to come back to fill for us to see a continuation in that particular trend. Fantastic. I've been able to establish two things now. Order blocks forming at the base, okay, fair value gap or market inefficiency created as a result of this massive push to the upside, okay, which market needs to fill, okay, because why? High volume traders, or what we call institutional traders, have set buy limits here for them to be able to take advantage of this move upwards. So you, as a retail trader, you're probably seeing gold at this level and you're like, I'm on this thing they buy you. Might enter buy. Bang, bang, bang. You click the buy, okay, and then for whatever reason, you start to see this happen. And you're like, what is happening? Why am I losing money? Okay, but you did not know that you were entering at the wrong point. So how can you pick your trades at the right points? That's what I want to show to you today. So first things first, understand what the structure is. So we have been able to establish that this is a bullish structure, correct? First thing. Now, the second thing on our note is what? Identify premium and discount zone using your Fibonacci tool. Okay, so let's go back to it. We all know what a Fibonacci tool is all about. If you don't know what a Fibonacci tool is all about, you can kneel down where you are and hands will be laid on you so that you can receive knowledge. Okay, so this is my Fibonacci tool. I am pulling it from the base or the start of that massive push up, okay, to the high where that retracement started from. Now, of course, my Fibonacci setting is quite different from what you are all used to because I'm only interested in three values. I'm interested in 0, 50, and 100. Okay? Now, in a bullish trend, this level here between the 50, okay, and the 100 is what we call the premium. Okay? Between the 50 and the 0 is what I call your discount. So remember from our PDF of the rules, market structure first, which we have done on 1 hour, identify premium and discount zones using your Fibonacci tool. I'm going to show you the settings for the Fibonacci tools shortly. Okay, so this is my Fib, this is the settings. Okay, you can see 0, 1, 0.5. Nothing more, nothing less. Everything unmarked, and that's it. Okay. Do you understand? So identify what? The premium, which is between 0 to 100, and identify the discount, which is within 50 to 0. So if I have been able to successfully identify this in a bullish trend, then what do I do next? Identify the OB and the FVG within the premium or discount zone. Now, if a market is bullish, I want to see if you are following me for real. Do I want to be buying at the premium price or at the discount price? Let me tell you the answer, because many of us would not know. We are expected, or it is expected, that you buy at the discount price. For instance, I used to make this scenario of a man that goes to the market. Maybe for whatever reason, you go to the market, and then they tell you that by the end of July, a basket of tomato, trust me, I don't know how much a basket of tomato sells for, but let's assume that currently it sells for 50,000. Okay, a basket in the market sells for 50,000. Then somebody tells you that in 1 month's time, a basket of tomato would actually, by the end of this month, a basket of tomato would actually sell for 35,000. Okay, based on information. Okay, and then this is information that you can trust. Okay, there's a possibility that you will sell between 35 to 40,000 naira. That's like a 10,000 naira difference, correct? Now, if you were going to buy that basket of tomato, if the need was not urgent, of course, you would probably rethink your decision and say, let me just buy small now, right? Then I will come back and buy a basket when the price is at 35. Yes or no? Let me hear your answers in the chat. Is that what you would have done? Yes or no? Exactly. David, thank you. Augustine, thank you. Thank you, thank you, thank you. If you want to know where I took the Fibonacci from, meet me or meet your account manager. Absolutely. I love that. That means you're all following me. Now, you want to buy at a discount. So in trading as well, you have to be smart with how you pick your trades. I mean, it will be foolish of me as a trader to be buying gold at 3,573, okay, which is just above here, when I can conveniently buy as low as 3,500 or thereabout. Okay, so as a trader too, you have to be smart. You want to buy at a discount, and then you want to sell at a premium price. For whatever reasons, let's say at the end of the month, you had bought your tomato at 35,000, okay? And then information reaches you again that, farmer headers crisis happened somewhere and somewhere. The farmers' tomato, a lot of baskets of tomato were destroyed in the north, blah, blah, blah. Okay, and then tomatoes prices will surge. Trust me. Now, if it surges, a basket of tomato in the market might be selling maybe after 1 week of your buying. It might be selling for like, let's say 60,000 naira. As a smart trader, what do you want to do? You want to sell your tomato so that you can what? Make money. Yes or no? Fantastic. So that's how trading works as well. We buy at discount prices, we sell at premium prices. So I don't want to dwell too much on that. I think I've stressed that enough. So identify the discount and premium prices, identify the FVG or the order block. I'm sure there's an order block here. In this zone as well. Okay. There's what we call an order block. So two things would usually happen here. Either you see another block, of course, or you trade off the FVG. So, but for my strategy, for this strategy, we are going to be focusing more on the FVG. Okay, and I will be showing you in the chart what the FVG looks like. I'll be showing you in the chart what the FVG looks like. Now, when you have identified all of this, now you can see that market pulled back into where? Our discount zone. I'm not interested in buying here. I'm interested when market pulls here. That's why it's a game of patience. I'm waiting patiently for markets to come as low as these values into my FVG. Okay, then once I have seen that, what do I do next? I jump to my 3 minutes or 5 minutes time frame. Okay, then I look for a lower time frame break of structure at the higher time frame FVG. So trading is uh uh it's all about following the steps. Basically, once you follow the steps, trust me, you will get the results. And then if you apply the proper risk management as well, I mean, we're in an environment where trading, I think I was reading someone and someone told me you can do the right thing and not make money. Somebody else, your neighbor, can do the wrong thing and make money. Does that make him a better trader than you? No. Okay, it doesn't make him a better trader than you. It only happens that probability played to his chance at that time. Trust me, such a trader would come back to you crawling on his knees when he sees your own result, because you know what to do and then you're following your strategy to the tooth. Okay, so now that we have identified the FVG, this is now my lower time frame. So this here is the H1. Okay, and then this here is my M5. That's 5 minutes time frame, or M3. Why is it not editing? Okay, took a while. So this is H1. Everything here I've been talking about since H1. Everything here is what? M. Everything here is M5. Fantastic. Now you will have heard a lot of people talk about sniper entry, blah blah blah. You must have even seen their charts. Now this is how you do it. Okay, so we have seen market, and then for the sake of this strategy, I mean, usually I don't want to sit with my chart a lot of time, so you can always set an alert. Do you understand? You can always set an alert at the FVG that you have spotted when when the pullback starts to happen. Okay, so you can always set an alert that feeds you, that gives you feedback. Oh, price has gotten to this level. Then you come to your chart and start to look out for this to happen. Now, patience is the game. Trust me. Now, when market is coming into this level, okay, it comes down. This is everything that is happening here. This is like a retracement. So market was selling. It comes down, creating lower lows and lower highs on the lower time frame, not 1 hour. Comes down, okay, comes down, clears this low, okay. So we see a break of this low, we see a break above, then we see a retest of a lower time frame FVG again. This will always happen, always happen. If it's not the FVG, you would see the other block down there, right? Now, if you see a breakdown, as price comes into your FVG, that's your H1 FVG, okay, you want to see this break, okay, okay, break, then another break, and I'm going to show you all of this on gold so far this week, and then I'll show you also some of the trades that uh, where we could have made money off. Okay, now there's a break below, there's a break above, then there's a retest of this FVG. Don't forget, I told you, whenever there's an impulsive move to the upside on whatever time frame, 1 hour, daily, 3 minutes, 4 minutes, 4 hours, 2 hours, whatever time frame you're looking at, there will always be another block, and there will always usually be an imbalance, okay, or an inefficiency that is created. So you need to spot that inefficiency on the lower time frame, maybe of 5 minutes. Then at the tip of that inefficiency is going to be your entry. Okay, now then if your entry is here, which is more like your buy limit, okay, because you have to keep tab on this. Gold is very, very, very volatile. I mean, all of these things can happen in less than 3-4 minutes. So you have to keep tabs, you have to keep watching. And then your stop loss, okay, this is for tighter entries, I mean higher risk entries. Your stop loss can be closer to the FVG like this, but for more, okay, discipline, your stop loss can just be below the structural point, which then would be the last low that was created before this break of structure above. So it's called it's what I call a protected low. Okay, this is more like a protected low. We don't expect price to trade back into this low or even take it out. If for any reason market takes it out, it means that our setup is invalidated. And then of course you would see setups that the market will invalidate. You know, be you own the market. Your own is to do what? Apply the proper risk management and then be sure that you're doing the right thing. Okay, so this is what I want to do. But usually sometimes I can put it here. Sometimes I can put it here. If you are very conservative, okay, you can put it here. But if you're high risk, why not? It allows you to use a bigger lot size and then you can put it there. Are with me? So are you following me, please? So forget about the PEEP value or anything. I just want you to understand the strategy first of all. Now, so when our expectation now is for market to pull back into this FVG and then continue upwards back to this last high that was broken when market pulled back. So this is it. Where's it here? Market pulled back, right? This is my target, TP. Okay, I'm not interested in what happens after this high. It's taken out. Do you understand? I'm interested in catching this high as my target and my stop loss just a little bit below here. Do you understand? Are we together? Now, fantastic. So this is basically what you need. I mean, this is basically what you need. Now, I'm doing a buy scenario because when I move to the chart now, I'm going to be doing a sell scenario, real-time chart. Okay, what happened yesterday, what has happened over the last 2 weeks, and then you will see how to play around this. Okay, but because of the brevity of our time also, I might not be able to look into too many charts analysis as such. Okay, so but I'll show you, of course, one or two things that would interest you, right? So let's move on. So I hope I've been able to establish something here. Let me know. Have I been able to establish something here? Let me know. Let me know. Let me know. Have we established some important truths here? Have we established it? Fantastic. Fantastic. All right. All right. All right. All right. All right. So for people who want to probably gain access to this again, I'm pretty sure there's going to be a recording that will be provided. Okay. Not maybe not immediately, so you have to be patient. Okay, but it will be provided. Do you understand? So you can go over it as many times as possible and then perfect it. Fantastic. So let's move into the chart. Gold. Let me just. Okay. What's happening? All right. All right. So I'm going to the 1 hour time frame. No time for place. Now, I'd marked this up all before I came here. Okay. So I just wanted to show you what had happened yesterday and what had happened days before, and then how you can take advantage of it. Now, you'd see that this market clearly, this is 1 hour. Okay, you come to the market on a day like this. Okay, even on the 4 hours, I mean, look at what has been happening, right? More bearish. Of course, gold generally has been in a range. Let me show you the daily. Since that all-time high was created. I mean, look at this. Literally, price has just stayed within this range. I mean, right? There's really been nothing significant in terms of creating new all-time highs or creating new all-time lows. Okay, it has just been in this range, correct? So, but I'm not interested in what's happening on the daily time frame because as an intraday trader, you want to look at your 1 hour, 4 hours, 30 minutes and lower time frames. Okay. You want to make money today. Now, this was a break of structure. This was structure. This was a like a high, created a lower high, a lower low, created a lower high, created a lower low, created a what? Lower high that created a lower low. Okay. Are we following me? Fantastic. So now I want to show you something that happened yesterday. But before then, let me show you what I mean when I say FVG. Now, look at these candles here, these three candles. Who's following me? Okay, let me use my this zoom tool to mark it. This candle here, and this green candle just there. Now, those three FVGs are usually formed as a unit of three candles. Okay, and then when these three candles form, usually within the, for in this case now, within the low of this first candle and the high of this third candle is what we call an inefficiency, which I have pulled my rectangle tool on. Are we together? There was an inefficiency here. You would see it if you're looking clearly. There was like a gap in between the high of the third candle and the low of the first candle that we are putting into consideration. Are we together? Fantastic. So now that's what we call an inefficiency. That's what you call the FVG. Now, when this happened, which led, now it didn't just happen, it led to a break of structure and a pullback happened. Now, let's pull our Fibonacci tool very quickly. Where's our Fibonacci tool? From the high, first step, second step, we had identified that we're in a bearish trend because structure just broke. So our low. What can you see here, please? Somebody tell me something peculiar to the second step. This is our premium. This is our what? Discount. Market pulled back into where? Our premium zone. Remember I told you, you want to be selling from your premium. You want to be buying from your discount. Market pulled back into the premium zone and look at what happened after. There was a drop. Now, in this place, okay, if we trickle down to a more smaller time frame, okay, can you see this? This was where we were. This was the break. This was the pullback. This is what the uh the 5 minutes time frame now. Now look at what's happening here. I'm going to take this off because I want to indicate something. Look at what happened here. There was this pullback, created a new high, so swept the high, swept the low, pulled back into the FVG there. Can we see the FVG on the 5 minutes time frame? If you can see it, tell me I can see it. I'll be so glad if anybody's seeing what I'm seeing. Let me draw it for you. Let me take out this higher FVG off. Okay, or I just color it something else. Now, this is the FVG. I hope you can see it. Between this candle and this candle was the FVG that broke structure here. Who's following me? You remember earlier I said that there has to be what? Where's that thing I drew earlier? Oh, I don't want to go back too far. Okay. Okay. It will take me too far. I don't want to go too far. All right. Remember earlier that I said there has to be something like this. Let me pull it out so that you see it. All right. A sweep of the high, a break below, a retest of the lower time frame FVG, and there shall be, in most cases, a continuation to the downside. So that's what happened here exactly. If you're following me, let me know. If you're following me, let me know. If you're not following me 100% and you're struggling, go back and watch the recording of this session. You will definitely thank yourself. Okay, so now let me take it back. There was what? A break above. Okay, there was a sweep of this low to change structure. So it immediately went from bullish, which was happening during this retracement, to what? Bearish at the break of the last higher low that formed. Okay, so and then in my strategy that I'm sharing with you, you are expecting what? A pullback into what? This FVG on a lower time frame. Set your entry. This is a sell entry. Set your entry now. This would have been our entry anyways, based on what I just taught us. At the base of what? What is it? At the base of this. And then your stop loss would have just been above this structural point. Okay? All right? Are we together? Please follow me. And then your TP would have been what? The base of this level on the 1 hour time frame. Let's go back to 1 hour. Who is following me? Who is following me? Did you see that? So stop loss here, just above that. I don't know what's happening to my mouse. So it's moving erratic like this. Okay, just forgive it. Okay, so but I want to focus more on the target. Okay, but we understand the concept where your stop loss should be, how we came about this FVG first on the 1 hour time frame. If this FVG was not in the premium zone, I'm not interested in the trade, and you shouldn't be either. Okay, so because it's in the what's it called, in the premium zone, we are now focusing on it to look for lower time break of structures, 5 minutes, right? And a continuation to the downside. Who's following me? Look at what happened after. TP what? Smashed. Are we following me, please? And then I wasn't interested in very stupid targets. I mean, my target was just the base of the 1 hour low that had formed. That's the 1 hour lower low that had formed. So I saw what? A change of market structure on my 5 minutes here. I'm emphasizing this again so that we get it. In this box here, everything I needed was locked. Okay, everything I needed was what? Was locked. In this box here, everything I needed was locked. And then when I saw it, I knew this is what I want to do. And then I went for it. Do you understand? Fantastic. So this is how you trade the strategy. Now, this is one of those scenarios. This is a trade that happened when? This was last week, Friday. Okay, this must have been a swing trade. Okay, it wasn't a swing. Okay, it was a swing because it didn't take profit until Monday. Yeah. Now, let's go to the 1 hour time frame again because we're still looking at this, right? So we have considered the first of it. Now, look at what happened after we created another low. Clearly, we're in a bearish structure already. We have created this low. Okay, I can bring my Fibonacci here again to the high and to this low. Okay. Are we together? Let me delete this. This is one trade. Okay, let me not delete it. That's one trade. Okay, now what happened? Price pulled back again. But this time it was a very, very what? Deep pull back. Correct? Are we correct? And then when it pulled back into our premium zone, what happened after? It created a new low, right? Now, I want to show you the trade that yesterday happened. Okay, now this was the high that I was looking at. Okay, and what is it? This was the low. Okay, just somewhere here. This was yesterday. I wasn't looking at a lot. So okay, this had not even happened yesterday. Sorry, this had not even happened yesterday. So let me take up the Fibonacci. So the Fibonacci was telling me that this was my last high and this was my last low. Okay, this was what the Fibonacci was telling me. So when I came to the chart, I think it was around afternoon or thereabout. Around, yeah, it was in the afternoon towards the New York session. I came to the chart and then I saw that market had pulled back this deep and then it was beginning to sell. So my expectation is that we are still here in the premium zone and then I'm expecting for this market to continue downwards. Okay, so what did I do in that instead? This was where I saw the market. I saw that there was an FVG that was created here in the premium zone. Okay, what I expected was a retest of this FVG and a continuation to the downside. Now, when I saw this FVG marked on the 1 hour, still in my premium zone, I simply came to my 5 minutes. Then I started to look for entries. This is it. This is it. Can we see this? Let me show you that change of structure. This was the low, created a high. This was a break, a retest, and a drop. Simple. Now, market cleared on the 5 minutes, gave us what we call a change of character, but I won't bother you with that. I'll just call it a market structure shift. Okay, broke this high, cleared this low. Following me, at that 1 hour FVG, don't forget the FVG I pulled out. Where's it? Does it keep taking me back? All right, this FVG here, can you see it? Between this red candle, this large red candle, and this small red candle, there was an imbalance that was created. Patience. So what did I do? I waited for this thing to come back into this level. When my alert told me it was in this level, I came to my 5 minutes time frame. Are you following me? I was looking for what? This. Can you see how it formed? Break above, break below, retest of this lower time frame FVG. Just in between here, very tiny one. Now, let me zoom in for you. Can you see it? Yes. Why is this thing acting this way? All right. Are you following me, please? Let me know in the chat comment. Okay. This thing is stressing me. What's happening? All right. So, but usually this was what happened. Anyways, there was an FVG there. Okay. And then as soon as the FVG was mitigated, okay, market came. People had said by a sell limit orders here. Market came to mitigate this. I remember vividly, some people took this trade. This was the entry just here. Oh, come on. What's happening today? Okay, this was the entry. This was a stop loss just above this level here. And then what were we targeting? This low. Now, all this trade happened under, I think it was very short, but it happened. Are you following me? I mean, if you want to even be safer, you can put it above this order block, this larger order block. But I mean, personally, I think the fact that market has changed character or changed market, shifted market structure, this is a protected high now. This high is what we call a protected high. And I don't expect the market to take it out. If market takes it out, it means we're probably going to see a continuation maybe in the other side, or market just did its thing. But if you follow this strategy to the tooth, to the dot, trust me, you're going to make money. So now let's go over it again. I hope I've been able to share some very important strategy or skill with you today. And then if you, trust me, if you sit with this for the next 2, 3, 4 weeks, just on gold, don't focus on Euro USD, don't focus on NZD USD, don't focus on any asset. Focus on one. There's something about focus. When you focus on one asset, it kind of helps you understand the asset more. You fall in love with it more. For those of you who have been fighting gold for a long time, this is the day of reconciliation for you and gold. You will become a lover of gold. All right. So this is it. First concept, market structure has to give us the directional bias. Second thing, we want to know where the premium and discount zones are using our Fibonacci tool. And I told you, I only use 3 levels, the 0, the 50, the 100. Okay, then the third thing I want to do is identify my fair value gap and other blocks within my premium or discount zone. So if I'm looking for a buy, I am checking for a pullback into the discount zone uh, 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 for the fair value gap and the other block. Okay, if I'm looking for a sell, I'm focusing on the premium zone, and that's where I want to sell from, not outside of it, not close to it, not outside of, not something above it, just in between that zone. I'm looking for lower time frame, 5 minutes or 3 minutes break of structure at the FVG, and then my entries are at the retest of the lower time frame FVG. That's my entry. Sniper, you're in. Okay, fantastic. So let me show you again on the chart. Last time, what happened here? We were in the premium zone. Like I told you earlier, you can always sell from what? Your premium zone. Correct? Now, when price had not seen all of this setup, okay, I was observing from here, right? And then when I saw it, I acted. What did I do? I've seen a 1 hour FVG. Current structure is bearish. Series of break of structures to the low side. So what am I waiting for next? Now, let's talk about what could happen next on gold. And let's see if it plays out to our advantage. You know, patience is always key. Okay, let me clear. What can I clear? Okay, let me clear this. Clear. Clear. Clear this too. Clear this too. This is how you mark out your structures. You're not worried about what's happening or what is not happening. You're pretty focused on the next opportunity that would happen. Okay, now this is our structure that we have established. Break, right? That's the structure. Are we together? Because you know why I marked this structure? Because it traded lower, isn't it? Yes, it did. Now look at something fantastic that happened here. Where is this? Okay, after this pullback, market came to create a new low, right? I want us to zoom in on this area here. Now we're zooming in on this area here. This was a pullback that created this low. All of this happened earlier today. Fantastic. So now let me take this off again. What can we see here? After market created this low, is it? After market broke below here, okay. I mean, we saw a number of close there, right? What happened? Market pulled back into the FVG here. Come on. Okay. Just follow me. Follow my line of thought. I don't know why is my mouse or something that's acting up today. It doesn't want you to get a premium knowledge. All right. So it pulled back, and then what happened? Market sold off. But let's see what happened in this zone on the 5 minutes time frame. Guys, did you see this? Are you following me? Who is seeing this? Tell me, who is seeing this? Is anybody seeing what I'm saying? Who is saying what I'm saying? Who is saying what I'm saying? Very clear. Chioma, I love it. Foucault, I love it. Who is seeing it? Those are the guys that are following me. David FX, you're seeing it. Fantastic. So clean. Josiah, Labo, Emmanuel FX. Now, very clear for all of us to see. Correct? Now, this is it. Sweep, break, came back to retest, dropped. Are we together? Now, where's my entry? Just here. Stop with this thing now. Stop loss. Like I told you, it can be above here. It can be just here. Now, what's this? 1 to what? This is a smart 1 to 3. 1 to, just say 1 to 2. Thereabout. I mean, 1 to 3 basically. Early this morning, 1 to 3 on gold. You're done for the day. You can go about your daily business. I don't know if you're following me, but now look at what market is doing. Now, market is slow because we're expecting a fundamental later this evening. FOMC minutes are going to be released. Okay. And then we need to see how the market will react to that to know where our next big move will be in. Are we following? As of now, on the 1 hour time frame, which is where we get our directional bias, gold is still very much what? Bearish. Are you following me? Are you following me? Fantastic. So what I'm doing today is I am removing the veils from many of your eyes, from many of your eyes, so that going forward, you will see clearly. You will not call trees men, and you will not call men trees. Okay? You will call candle, candle, and you will call profit, profit. Okay? So very fantastic. Very fantastic. I'm happy that many of us can see this. Like I said earlier, for those who are not following, there's going to be a recording which will be made available. Okay. 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 So I think it's a good place to go back to my slide, and then we'll be preparing to wrap up this section shortly. Okay. But before I end the session, I want to show you something yesterday. This is one of our VIP clients, okay, sharing with me that trade that you told you earlier, okay, where I told you I saw the FVG on 1 hour yesterday, and then I gave the analysis to one of our VIP clients, okay. He didn't wait till TP, okay, but he made money. Do you understand? So it's something that we also can leverage on. Like I said earlier, if you want a VIP or a special session like this, something you can speak to your account manager about, okay, and then they can give you access. Okay, they can give you access. They can tell you on what you need to do to actually make money trading on the platform. Okay, I mean, what's there if money is not being made? Why are we then on the market? I do wonder. Right. So now, finally, as I wrap up, I'm going to wrap up with this Jim Rohn's quote. Okay. I know I've said a lot from my story to how I lost over $8,000 trading gold far back 2021, 2020. Okay. And then so many other things. But the most important one are the last 3 slides, the strategy. Okay. strategy, very important. Repetition is the mother of all skill. Repetition is a what? Mother of all skill. I want you to sink that in for. So repetition is the mother of all skill. In my language, I'm a Yoruba man. They would say in Yoruba that if you are urinating to a spot, you would generate more. How do I put it? You generate more. I mean, I don't know. I mean, for guys, anyways, maybe not for ladies, but for guys, if you're urinating on a spot, you will discover that the effect will be more as to spreading it all around, spreading it all around. So what I'm saying in essence is if you sit on one strategy, if you sit on one setup, if you master it to the best of your ability, okay, back testing, forward testing, whatever testing, you would find yourself a more profitable trader. Okay, now I know some people will be wondering, Mr. Sam, who are the VIP clients? Okay, so on 10Trade, on the brokerage arm of 10Trade, we have designed it such that not every client is getting the same treatment as as you think they are. Not everybody gets the same access to the account managers, okay, like you do. Some people, the account managers call them by 10. Okay, I remember there was a time I was speaking to someone late in the night. Okay, not everybody will be spoken to late in the night because there's a certain amount of accord, there's a certain amount of attention that we tend to give to the VIP clients. And then why are they VIP clients? They are VIP clients because they know that this market is something that you engage with the right resources. Okay, now just to break it down, we have different packages. Okay, there's something we call the diamond package. Okay, this is where most of our VIP clients on, and these are clients that have a minimum of $5,000 in their trading account. Okay, now what we do for these clients is, you remember, this is a screenshot. This was sent to some of VIP clients under myself, but this is just one of them I decided to show us. Okay, now these VIP clients receive technical insights on high yield assets like gold, like Bitcoin, like silver, like what's it called? Like uh, Ethereum, and so many high yield assets like that. So you receive a one-on-one. You're receiving, okay, this is what is happening on gold currently. This is the point you could buy or sell from. You can be looking at this level to actually take profit. You receive technical insights, well detailed, okay? Because these people are people who literally are engaging the market with better volumes, and then they have things that they want to pursue. Okay, beyond the technical insights, you would also receive a one-on-one training session with our chief market strategist. Okay, a one-on-one training session with our chief market strategist. So you will be learning his personal trading strategy. I mean, this is about 14, 15 years of trading experience. You will be pouring on you. Okay, beyond the one-on-one session, you also get access to VIP trading signals. Okay, so you're accessing signals that not every other person is accessing. As a matter of fact, we send signals from time to time. Some people get one in a week, some people get two in a week, some people get five in a week. Okay, it depends on where you are, is what you get. Okay, so for the diamond package, you will be able to engage our VIP signals, and then trust me, of course, you can be assured that it's one of the best that you will be getting from our analyst here at 10Trade. Then we have the Ruby session that starts from clients that fund at least $3,000. Okay, now if you have $3,000 in your trading account, either your pro, your ECN, or your standard account, okay, you have access to what we call the high yield technical analysis on high yield assets. Okay, you have access to the VIP signals, but you don't get the access to meet one-on-one with our chief market strategists, and then you don't have access to certain trading indicators that we give. Okay, now we have a lower package of gold is a 1,000 and above. Okay, so with a 1,000 and above, you can access what we call high and low risk trade signals. You can access basic trading indicators. You can access what's it called, the breakfast and lunch webinar sessions that we have. As a matter of fact, some people on our WhatsApp channel, and then this morning there was a trade on Euro JPY that was called out during the breakfast session. If you are a client that has at least $1,000 in your account, you would have been able to access this session, and then that trade would have been yours. That profit would have been yours. So you have access to the breakfast. Also, do we have a list of the packages, which is the silver package, which starts from $100 to 500. Okay, so if you're on this package, it means that you only have access to 1 or 2 trade signals every week, and then you don't have access to the indicators, you don't have access to any one-on-one session, you don't have access to the high yield technical analysis that we provide on Bitcoin, on gold, on silver, and so on and so forth. So I mean, like I told you earlier, there's a session in this office, our office here, where we host our VIP clients. Okay, so and then of course, trust me, I mean the AC is very cozy, and then of course you get access to so many other things that can enable you as a trader to be profitable. And in fact, you will have access to our chief market strategy as a diamond client, like I said earlier, where you will learn firsthand what it takes to be profitable. Okay, so if you want to be a part of any of these packages, or you're thinking of upgrading to a higher package from where you are, meet with your account manager in the chat session. Let them guide you on what you need to do. Do you understand? Let them guide you on what you need to do. Let them guide you on what you need to do. Do you understand? So, like I'll be rounding up shortly, but in very, very important, you need to be you need to be on this to make the best. Okay, you need to be on this to make the best. So repetition is the mother for all skills. Fantastic. So I just wanted to share with you these packages in full, and then we'll wrap it up. We'll call it a day. Okay, so diamond, ruby, gold, silver. Don't forget I told you this. Diamond, this is what you get access to. Access to live trading sessions, access to exclusive VIP strategy sessions, access to one-on-one. Okay, the copy trading is available for everybody. Access to VIP trading indicators. The Palm account is available to everybody. Access to VIP signals. Remember I said that. Access to technical insight on high yield instruments like gold, like Bitcoin, like the US oil. Okay, the bonus is also available. Okay, then we have the Ruby, 3,000 to 5,000, breakfast, VIP indicators, that's what you get. VIP signals, that's what you get. Technical insight on high yield asset. Okay, where is Bitcoin going to next? You can't be playing around. Okay, where is Bitcoin going to next? You want to be on this call, you want to be on this package to understand what we are doing with Bitcoin, what we are doing with gold at the moment. Okay, I mean, and then on the gold, 500 to 1,000, you have access to live trading sessions, you have access to basic trading indicators, to the trading signals that we give. Okay, and then on the silver package, no indicators, just trading signals, just the lunch with 10 trade and breakfast with 10 trade. Then also the live news trading sessions. I forgot to mention that CPI is coming up next week, Wednesday. It's a live news trading session. You want to be on this session with PS. Last time it was very fantastic. Next week, Wednesday by 1 p.m., this session is going to kick off. Fund your trading account and be sure to make money. Let me tell you a story. A client of ours joined the last session we had with PS. Okay. And then at that time, he was engaging the market with just about, I think, about $500. Okay, when he made about $120 or thereabout on the CPI session, he called his account manager immediately. That session, are you guys doing it again for NFP? We said, no, we're not doing it. And I had already funded $3,000. I want to take advantage of it. So you see, the next one, you don't want to miss out on it. Okay, so this will be the end of today's session. Like I said earlier, the recording will be available for you to go over and over and over again, perfect it, master it. If you need further guidance, reach out to your account manager. I'm sure that I have been able to impart some very good knowledge. Thank you once again for joining. I remain Samuel, and you can call me RSI. Okay. Thank you for all for joining. Enjoy the rest of your day, please.